Hi guys, welcome to honeystocks.com analysis for the 15th of August 2019. Now, if this is your first time here, please pause the video, just make sure you're comfortable with that, because I'm about to walk through maybe 7 or 8 charts that I feel like you need to be aware of at the moment. I think the market is obviously incredibly challenging. I've had hundreds of emails, messages, social media. It's crazy, and I just wanted to get this out there just so that you can see exactly what I'm seeing in the market and why it might be an environment where you might just want to be defensive and sit on the sidelines. And if you do get value from this, if you enjoy it, feel free to subscribe to our channel. We try to upload maybe once or twice a week just when time allows, and try to give as much value as possible. So I think the first thing I really want to do is really just dive into the charts. Now, I think the main thing that we need to be focusing on at the moment is what is going on with the overall market. It's not just about, your position that you might be having in, Apple or Amazon or, whatever the stock of choice is. It doesn't really matter at the moment, because what we're seeing so much volatility in terms of the daily fluctuations with price. One day it's up massively, the market, the next day it's tanking. That's just the way it is at the moment. But the one thing that the charts do tell us is what the overall sentiment of the market is. There's a misconception amongst, fundamental guys that, technical analysis, just doesn't have a place. But technical analysis is really just the study of price. And we can see here this is not great. The Dow is breaking down below support. It's that's not great. So do we want to be buying the market when the most important index on the planet is breaking down? Possibly not. This is the daily chart for the Dow. Now, what I would say is if the Dow reaches this level here, we would be in correction territory. And if we get a drop below this level, as we've seen, I think the one thing that I understand better than most is that, we never expect history to repeat itself. However, history, more often than not, it does rhyme a little bit. And what we can see here is we've got a failed breakout here, which was the key to get defensive. So for those of you that haven't followed me for long, I've been advocating getting defensive on this move to the downside here. And again, we just need to see how far it can go for things to really turn ugly. This is the S&P 500 index SPY. Again, mindful of the key levels, because this drop here correlated with many stocks losing 30, 40, 50, 60% of their value in the space of 3 months. So we need to be mindful of this. And if these support levels break, again, it's not an environment where you want to be holding a lot of position size to the long side. This is the daily chart for the same index. Again, mindful of the key levels here. Tech, very close to breaking down. Again, already highlighted out the main areas that we need to be watching carefully, because again, if these levels break, you might want to reconsider what you're doing in the market. This is the Russell 2000. Now, for those of you that have followed me for a long time, for the last couple of years via my website, my other social media channels, my YouTube channel is actually quite new, then you'll understand that there's always one index that gets the party started. And the Russell 2000 might be the index, in this case, to trigger a knock-on domino effect to the rest of the market. Because if we think about a basket of 2,000 stocks, which is obviously a significant number, if we think about 2,000 small cap stocks starting to drop, yes, some of them will hold up okay, but by and large, if the major index breaks, you're going to see a lot of selling action with the small caps. And it doesn't matter how good your company is. It doesn't matter, what the fundamentals, what the balance sheet looks like. If the stock price is being driven down, I don't see the point in holding on to a stock. For me, it's more of a case of, protecting capital, protecting profits. That there always has to be a point where the stock price currently is and zero, where you have to be able to say to yourself, yep, I'm done. Because, that is the worst case scenario, is the stock price going to zero. And it's all about risk management, capital protection, and that is what the technical approach does for me, at least. So yeah, that's really what I'm seeing out there in the market. That's obviously 4 of the major indices, and although there are many charts that I could obviously walk through here, I could go through the 400 mid cap index, I could go through the value line geometric index. Many of you won't understand what those are, so I'm just going to keep it simple and keep it to the 4 major indices. But if you have found any kind of value from this, as I said before, please do subscribe to our channel. We try to upload once or twice a week, just as much as time allows for me to do so. And if you do want to take it a step further, please do go and check out our website, honeystocks.com. We've just made a super exciting announcement with regards to options. We've just taken on board one of the leading options strategists on the planet, and I don't use those words lightly. I reached out to the CMT Association, of which I am working towards my chartered status at the moment for technical analysis, and it was the name that kept coming up. So feel free to go and check out our website, and maybe I'll see you and speak to you soon. Thanks.